Hello everyone, this is Matthew Fraley with BreakpointTrades.com, founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and my personal passion, mechanical trading systems, which we have a ton of. Anyway, guys, a lot going on with the market. Unless you're under a rock, you know what happened today. Futures were down big time on Sunday evening, which followed through on the cash market today. We had a big gap down in the market. Catalyst being the news on the weekend with the AI product out of China, DeepSeek. And boy, NVDA got absolutely hammered, down $600 billion, the largest single one-day decline in a stock in history by market cap. Anyway, a lot to discuss, so let's get going with things. Here's a table of contents with what I'm going to be discussing in tonight's video. This is also our back-end recording system for our website subscription service, which you should consider becoming a subscriber of if you're just a YouTube follower. And I'm going to get that recording started right now. Hello everyone, this is Matthew Fraley with BreakpointTrades.com. This is the Monday, January 27th newsletter. As you can see, newsletter is divided into 6 major sections. We've got a lot to discuss. It was a very volatile day, as all of you know, unless you were hiding under a rock. As you know, kind of started over the weekend. Well, first off, let me back up. Late last week, I was talking about the market having 5 waves up. And so we're looking for a correction in the market. Well, when the market is vulnerable, that's when you get these news items that come out and justify the chart. So we already had 5 waves up on the S&P, and then on the weekend you had the news of DeepSeek, the AI product from China that's open source, etc. Again, I'm not going to go way into it, but that spooked the market big time. The market futures open at 6 p.m. Eastern on Sunday. They gapped down and they continued selling off overnight. They were down well over 130 points on the ES futures. So we had a nice gap down in the cash markets today, which mostly trades sideways. So NVIDIA got absolutely taken to the woodshed. For example, NVIDIA today fell almost $600 billion market cap, which is the largest single day decline for a company in history. Okay. Just to put that in perspective, the loss in value was bigger than the market cap of 487 component companies in the S&P 500. Think about that, guys. The decline in NVIDIA was larger than the market cap of 487 companies in the S&P 500 out of 500. So, NVIDIA has a huge weighting. So, obviously, Nasdaq, S&P got hit, etc. So NVIDIA itself was down 17%, and we'll see, how things drop. The market's first reaction under uncertainty is to sell. Now we'll see as things settle out, what the market decides to do. There's still multiple options in the marketplace. So first off, one positive I'd say today is that there are quite a few up sectors today. So out of 21 sectors, 13 of them were up and closed pretty strongly positive. And we have a lot of earnings here this week. We have Meta, Microsoft, Tesla all report on January 29th. We have Apple reporting on January 30th, and then Google on the following week. So we also have a lot of news items this week. We have the FOMC on Wednesday. That's a big one. A lot of other economic news. I'm not going to list all of it. We also have PCE, inflation data on Friday, again, in addition to all these earnings. Now, as far as the market, like I said, we could count 5 waves up last week in the market off the January 13th low. So the bullish option would be that was a wave 1 of 5, and this is a wave 2 pullback of 5. Wave 2 pullback can be quite deep, guys. So this is still valid, but again, the onus is on the bulls here. We need to form a higher low and not get too deep. So let me let me show you an example illustration of this with an S&P 500 chart. So first image below, item number 2, here's a 60-minute chart of the S&P 500 that I've been showing, we've been showing here for quite a while. So, we had the low on January 13th, as you can see here, right? And then we had that very impulsive move up. And as I stated last week, you can clearly count 5 waves up, as you can see here. So we were looking for some sort of pullback. The market was looking for a pullback. It just needed a catalyst. Well, we got that catalyst in a big way on the weekend. And you can see today's huge gap down. The S&P 500 ended up closing down about 89 points. It was down much more. Futures were down even more than that overnight. So the bullish option would be, this could be wave 1 of 5. This would be a wave 2 pullback. It's likely to form at least a 3 waves. So your initial decline is an A, then a B, lower high, then a C down. Okay. Also notice this broken downtrend line here. It would be nice to hold that as well. We filled, obviously, remember we had 3 open gaps to the upside. That's why I wasn't really interested in chasing the market long up here, not with 3 open gaps and 5 waves up. So today, big move down. We filled that gap, and we got into the second open gap. If this is an ABC, I think we could see some further from bounce from here, maybe tomorrow, early this week, and then maybe another decline in a C. Now, here I added fibs. So today's low, just over the 50% fib. Now the Nasdaq is weaker, and I'll show that later. But honestly, a wave 2 pullback, they could be quite deep, 50%, 61.8%. Much below that, though, then that starts putting this into jeopardy. But that's just an example of, what we see technically. Now, the bearish case is you put in a wave 5 up here, wave that completed the ultimate wave 5 on the daily, and we're now in a bigger correction. But let's see if the bulls can hold some of these important areas and how the market reacts after the dust settles. Okay. Now let's talk about some of our mechanical trading systems. So first off, here this image shows you both the open mean reversion systems and the volatility systems. So in the mean reversion systems, we still have the open QEBTS system. That basically went long right at the lows there on January 10th, I think that was. So it caught the low, and we're pulled back here. It's still long, but it has a heck of an entry there, so it's still wildly profitable. You can see the previous entry went long and sold it, oversold, lower high bounce just perfectly. So that system, QEBTS, is still long. You're still nicely profitable. Remember, we had taken half off on the first move. And the breakout system, unfortunately, went long last week. We were quite overbought. Again, that's the nature of the breakout. We're always overbought when it goes long. But anyway, that's still long. That actually took a second entry today. I sent out a trade notification to everyone about that. That said, guys, needs to go from here because 2 entries is the most you get on the breakout. If this goes down much more, it'll stop out. Okay, so the stop is actually pretty close to this. So we'll see if that ends up working out or not. We're just stopping out. Now, as far as the volatility systems, I haven't officially been emailing these out, but I communicate them on our trading community, and also I have been talking about them in the newsletters. So Apple volatility system went long last week, sold today. It's a nice trade. Goldman Sachs was short a first and second entry that closed today. I'd say roughly a break-even trade. The second entry made a little money. The first entry lost a little. And today, EFA system went short. Okay. Now, Apple reports later in the week. I think it's on Thursday. So I wouldn't be surprised if Apple moved up into earnings. But that's an update on the systems. The KISS systems, of course, are on the website, and you can check those. We've had a lot of KISS systems, on the indexes, stop out, etc. Not surprising in this market environment. Okay, back to the general market newsletter. So item number 4 shows the index sector table, what transpired today. Again, you can see the decline on the indexes. Nasdaq down about 3%, not surprising. It's a big day, but NVIDIA has such a huge weighting on it. Like I said, NVIDIA had the single largest market cap pullback ever today. It's about $600 billion. S&P down 1.5%. The Dow was up 0.65%. We've been seeing some sector rotation here. Russell down about 1%. That held up fairly well too, but the Dow was up. As far as the 21 market sectors, obviously the losses concentrated there primarily in semiconductors with NVDA down 9.2%. That's a huge day. Uh, Technology down 4.9%. But otherwise, quite a few up sectors, as you can see here. Quite a few. So we did have some sector rotation. It wasn't a 90-90 sell-off day. It wasn't a broad-based sell-off. Mostly concentrated. Currencies, US dollar was essentially flat today. Cryptocurrencies, Bitcoin losing 1%, still over 100,000. Commodities, mostly to the downside here. Some pretty good losses here. Uranium down 11.25%. It's had a really good move lately, but man, gave a lot back today. General Index, DBC, 1.5%. Crude oil down 2%. Natural gas down 8%. Copper down 2%. So some big losses here. And also in the precious metals, remember, gold made a minor new high last week, but down 1.5% today. Sort of a double top look, honestly. Silver down 2.5%. The mining stocks down 1.6%. And we also continue to see a pullback in the 10-year, 30-year Treasury yields. Next, item number 5 is the economic news calendar. Again, we had a lot of news this week, guys. You can see here. I'm not going to read all these. Some of the big ones, FOMC on Wednesday, PCE Core on Friday, PMI, Chicago PMI, and of course, all the slew of earnings. So let's get started with the stocks charts here. So, chart number 6, here's NVIDIA. Absolutely smashed, down 17% today, losing that shell support. It's in this next demand zone, but closed below its 200-day moving average. Honestly, not looking pretty. Again, the single largest market cap sell-off in history, down $600 billion market cap. NVIDIA lost its top spot. It's now shifts back to Apple. Again, it's going to be interesting how this AI stuff comes into play here, guys. The market will digest that here in the coming days. I'm not going to get too much into it, but, I think what shocked people is, how China was able to develop that with such low cost and with all the sanctions in place, and it's open source. One positive is that open source could actually allow a lot of other companies to get into AI at much cheaper prices than relying on NVIDIA and ChatGPT and stuff like that. So that could be a positive that the market's looking at as well. So we'll see. Next, chart number 7, here's another daily chart of NVIDIA. You could also see kind of a wedge pattern, which clearly playing out. There's another little demand zone here, which we're into, and there's an uptrend line here. But again, one option here, maybe you get a little dead cat bounce, lower high, then down again. All right, moving on, chart number 8, here's Meta. So Meta was up nicely today, up almost 1.9%. Earnings are on Wednesday. Okay, remember it had this bullish coil. Well, this was a nice pattern you could have bought last week in the coil. So nice pop here today, and of course it triggered last week out of the coil. Next, chart number 9, here's Microsoft. Microsoft gapped down today but recovered quite a bit. Otherwise, it's still in this big coil pattern. This also reports on Wednesday, the 29th. These all report after hours, not pre-market. Next, chart number 10, here's Tesla. This also reports on the 29th. Not surprising, Tesla's been weaker here. Remember, to me, it kind of had a bear flag look to it. I talked about this last week. It tagged that supply zone where it's been pulling back from. Right now, it's testing the 50-day. If it loses this, your next demand zone is down here, below. And chart number 11, here's Apple. So Apple rallied today pretty nicely, up 3.2%. And remember, Apple didn't get hit on the AI stuff because they've kind of been behind the curve. So they actually benefited today quite a bit. Earnings are on the 30th. That is a Thursday. So we'll see how market reacts to these earnings this week and how the market digests the news and the FOMC on Wednesday. Again, there's a lot of stuff this week, folks. All right, moving on to the index chart. Chart number 12, here's the daily chart of the 5 major indexes. Again, you can see the big gap downs. We did cover off the lows. You can see the Dow was up very strong, actually bouncing right off its 9 EMA. Everything else is well below that. Chart number 13, here's the Dow Jones itself. Again, Remember back in December, it broke the channel, back tested the channel as resistance, pulled back again into demand zone, held the demand zone, rallied up, basically flagged off its 9 EMA. Now there's a little supply zone up here where it's getting into, but it's been very strong. Next, moving on to the S&P 500 charts. Here's the weekly view. Okay, just showing that because we do have a divergent high of last week's highs. You can see on the RSI. Important levels, I'd say, would be this RSI trend line area. The channel, of course. So we'll see. Chart 15, here's the S&P equal weighted. So this has rallied the last couple weeks, but you can see logically stalling around that 61.8 fib retracement. But some money has been flowing back into some of these smaller cap or stops, that are not the big cap tech stocks. Next, chart 16, here's the S&P KISS system. Again, little chop here as of late. Again, the system kicked butt with those 3 big trending trades over the last year and a half. But, after that, sometimes it's due for some whipsaws. And you definitely had one previously. Went long last week. It's still long here, but again, depends on what the market's going to do. If the market can hold in here and make a new high, this trade will likely be okay. But, we'll see. Next, chart 17, here's the 4 time frames. So, again, remember, we were quite overbought coming into the Friday of last week. Talked about the 5 waves up. You can see the DeMark 13 on the half day, DeMark 13 on 130 minute, and those played out for nice sell-offs, as you can see. We're below the ATR on all these lower time frames as well. There's also a cycle sell on the daily up here, so be aware of that. Next, moving on to back to the standard charts. Here's the daily S&P. So remember, we made that minor new high last week, then a rug pull today. Notice we opened right on this broken downtrend line and bounced off of it. So that's obviously a big support area. We'll see how things unfold the rest of the week and reacts to the various news and earnings. Next, chart 19, here's the megaphone pattern. So you can see the same trend line here where we tested today. Next, chart 20, here's a half-day chart. Remember I was talking about this that wave 4 low from January 12th, 13th. Here I added fibs. So you can see the low today got around the 50% fib. So like I said, the bullish case, the bearish view would be we put in that wave high 5 last week at 61.30, and we're going to enter a deeper correction. The more bullish view is this is simply wave 1 of 5. This is a wave 2 of 5. Again, wave 2s can be deep as long as it forms a higher low. I like to at least see it hold one of these fibs. Really not go below that 61 fib. That's getting pretty deep for a wave 2. Next, chart 21, here's a 2-hour chart. Just showing these gaps today. We had 3 open gaps to the upside with that strong move up. That gap up there is filled. We got into that second gap before bouncing. And of course, now we got another open gap to the upside with today's big gap down. Next, chart 22, here's that 60-minute chart, one of the first charts I showed. Again, you can clearly see the 5 waves up from last week's highs. We were expecting a correction. Market was vulnerable. Well, we got the news catalyst on the weekend. So that set the stage. Again, the bullish view would be 5 waves of 1. 5 of 1, and then this is an ABC pullback, which would likely have more to unfold. So we'll see. Next, chart 23, here's the Nasdaq KISS system. Again, this one didn't go back long here recently. It's still in cash. The last trade was a little whipsaw, but otherwise it's in cash here. Next, chart 24, here's the 4 time frames. Again, we were quite overbought late last week, but, pulled back from those DeMark 9s. And we're below the ATR on all the lower time frames. We did have a support cycle in the 78-minute, which we bounced from today, but ATR resistance is above. Next, chart 25, here's the weekly view. Obviously long-term was still in this channel for now. Been in this uptrend channel here for a couple of years. Chart 26, here's the daily chart. Again, The Qs, unlike the S&P, did not make a new high. But now it's the onus is on the bulls here to form a higher low. Otherwise, a better highs in place. But again, we're still above key supports for now. Chart 27, here's a 60-minute or a 2-hour chart. So again, you can see this one filled the two gaps, unlike the S&P, and got into that first one, that third one below before bouncing a bit. Here I added some fibs. And again, you can see how much weaker the Qs are. The lows here were below the 61.8 fib. The S&P was only around the 50% fib. Here's a great example of the RSI trigger. I've talked about drawing trend lines on the RSI when you can draw a nice uptrend line. You can see the trend line break here. Would even gave an excellent sell signal last week before the drop. Final index here is small caps. Remember, they were struggling right around there. After bouncing off the 200-day moving average, they struggled at the 50-day, so pulling back here. You got a bearish moving average pinch here. But we'll see if this can form a higher low now. This bounce off the lows is kind of a symmetry break, so we'll see if we can form a higher low in this pullback. And chart 29, here's a 2-hour view. Pulling back here just shy of that little supply zone above. So there it goes on the market, guys. We'll see how things settle this week. And let's move on. So let's look at some indicators. Chart 30, here's the VIX. So the VIX was up today 20%, but still closed back inside its bands. So that's one thing to watch. If we were to sell off again and close back above the bands, that's notable. Chart 31, here's the 60-minute chart of the VIX. Remember, the VIX loves to fill these gaps. Anyway, we filled two of these gaps here. Last week, remember, we filled that gap, and I pointed out that MACD positive divergence. So that corresponded with the S&P having 5 waves up. Like I said, we were looking for a pullback. Well, boom. That divergence played out in a big way. Next, some things we discussed on the weekend. This negative breadth. Here's the NYAD, advanced decline issues. You could see the lower high here. Well, you had a higher high in the S&P. That was a negative divergence, usually a pretty good indicator. Here's another version. The NYSE common stock advanced decline, lower high, so a divergence with the higher high in the S&P. Another one here. Remember, I've been showing this for weeks. I've been showing this since last year in early December. This is the S&P 500 at the bottom versus the Indian Exchange Nifty 500. You had a lower high in the Indian Exchange, higher high in the S&P, and these divergences in the past have led to corrections, and you definitely had a big divergence here. It's starting to play out bigger now. Well, especially on the Nifty 50 keeps selling off. All right, since the market's done what it's done, let's look at some of the individual sectors, see how what the carnage looks like. Here's XOK Technology, clearly rejecting down pretty strongly. Here I added like an expanded megaphone pattern. 200-day moving average is below. We'll see if it finds support down in here. Chart 36, here's XOC, that's communications. Again, the big weighting components are Meta, Google, so it's like watching two stocks, but this obviously is still very strong. Not surprising. These companies report this week. Chart 37, here's semiconductors. Well, they got smashed down today. You can see breaking a trend line. Here I added a demand zone, which is below here. So bulls would hopefully at least hold that, but this chart isn't looking too hot. Let's look at some strong sectors here. So here's financials. Financials and banks had a big day. I mean, this is up 1.1%, basically testing the highs. Very strong. Here's healthcare. Big up day, up 2.25%. Look at today's a huge candle, taking off that supply zone. Remember, the trigger long would have been breaking this channel early last week. So that was a symmetry break, and this had a nice follow through. Here's the transports, IYT, also a big day, up 1.6%. And chart 41, here's consumer staples, a huge day as well, up 2.7%. You can see it bounced off that demand zone below. So you see the point? There is some sector rotation going on here, guys. Chart 42, here's utilities. Now utilities, you can see, got smacked down from that supply zone I was showing last week. Chart 43, real estate. This continues to rebound with the rates pulling back. And the energy market, here's XLE Energy. Remember I talked about this supply zone in the last weekend's newsletter? Well, it's pulling back. That said, I am looking for a buy opportunity sometime on this pullback. Now, I only see one wave down here, so I'm thinking this might be a wave A. Maybe you get a lower high wave B bounce, then down in a C, and that might be your better entry. Chart 45, here's oil services. You can see also a nice pullback from that supply zone. Next, moving on to commodities, chart 46, DBC. Here's the weekly chart. We drew this upward trend line. So it's otherwise, commodities are still in this big range it's been in for a couple of years. Here's your component breakdown. Highly concentrated in energy. And there's quite a few treasury bills in here as well. Chart 47, here's the daily chart, again pulling right off that resistance zone. Closing right above the 20-day moving average today. Chart 48, here's crude oil. Pulling, remember this supply zone I marked a couple weeks ago? It's pulled back pretty strongly. Now, it did dip a little below the demand zone today. Chart 49, copper. Nice pullback as well. We'll see if it can hold that broken downtrend line or not. Chart 50, DBA agriculture. Popped out of that coil last week. Still quite strong. Chart 51, here's the weekly view of DBA. It's been quite strong, especially since early last year in February after breaking out of that cup and handle pattern. Chart 52, here's the 10-year treasury yield. Continues selling off here. 50-day moving average would be your next support below this little demand zone. Chart 53, TLT 20-year bonds also have bounced so far off this demand zone. Chart 54, here's TLT on the daily. So remember a couple weeks ago we had those doji candlesticks. It was very oversold. I thought it was a low risk long there. Still looks pretty good here. Chart 55, high yield corporate, still holding up quite well here. That's maybe a positive for the market. This is still at new highs. Market likes to follow that. Here's crypto, Bitcoin pulling back here. You can see the low over the weekend tagged that trend line and bounced off of it. Again, I think this is going to go primarily where the general market goes. If the market recovers to a new high, then likely Bitcoin will as well. If the market doesn't, though, and goes into a bigger fourth wave correction, I think Bitcoin will pull back too. Here's the weekly view of Bitcoin. You can see this clear 5 waves up, right? So once this ends, we're looking for a larger correction in Bitcoin. Chart 58, here's US dollar. This has had a nice pullback the last couple weeks. Bounced back a little bit today, but still looks weak here. And here's the weekly view. Remember we pulled back off that big supply zone a few weeks back. Chart 60, here's Japanese yen. So one thing to support a weakening dollar would be the yen's trying to bounce off this demand support area. And here's the bigger picture, Japanese yen. You had this monthly wedge, which we broke mid last year, and price has been riding the wedge here. So we'll see if it can rebound off this wedge. That would result in weakening dollar. Chart 62, here's gold. So gold made a brief high last week, but that could have been a double top. I'm still not sure gold is ready to run yet. Again, I think over time it'll get to new all-time highs above 3,000. I'm just not sure it's totally ready to run yet or if it needs more consolidation. Something in me tells me that it might need more consolidation, but we'll see. Chart 63, here's the other chart of gold. Again, the positive, we took out that little high, but it doesn't mean this still can't be more complex. Chart 64, there's another chart. You can see a big sell-off today, down 1.5%. Chart 65, here's silver. Now silver, you can see, has been stalling at this downtrend line. It's been quite important. Many tests on this downtrend line. Honestly, for those of you wanted to be conservative, you could wait for this downtrend line to be broken before adding a bunch. So now we'll see. Does this enter a deeper correction? You have very strong support way down here. I don't know if it gets down to there or not, but it really needs to clear the downtrend line here. And chart 66, here's GDX weekly chart, just showing you how much weaker the stocks have been relative to the metal. While gold basically got very close to its all-time highs, mining stocks did not. Here's the daily chart of GDX. Now, pulling back, still holding above the 90 EMA for now, though. And the final charts, guys, let's look at some trade ideas. Here's SMMT. This is a long idea of ours that broke out last week. Had a hell of a move in a supply zone. But again, great trade. That was a tight pattern, from around 19 all the way to 25 was an excellent trade. Chart 69, TVGN. Little low price biotech that I've had on the watch list was a wedge. This broke out last week. Today it hit $1.95, so that was a very good percentage move. Here's some others. RKT, Rocket Companies. This has been on our list. Notice these dotted lines at symmetry. Well, with today's move, you have a bullish symmetry break. So I bought some of this today. That gives some evidence that this downtrend line or downtrend may be over. And finally, here's AZ Smart Cart. As you know, we've been following this for quite a long time. It's one of our speculative investments, not a trade. We had a webinar. We talked about it back here in October. And when it was in the $2 range, like $2.75, the sucker ran up to $7.50. So anyone who bought back then, you had a hell of a move. And right now, it's really consolidating. So nice coiling action here. Good volume today. So moving average ribbons finally consolidating. And after hours, they announced a financing. A group invested $30 million private placement at a price of $6.40. So hopefully that puts a good floor support here. And we'll see if the news takes that positive. I'd love to see this puppy pop out of this pattern. Maybe finally move it to $10. All right. We'll see what happens tomorrow, guys. Quick check on futures. ES futures are down about 9 points. ES future, they were up, and Nasdaq futures are now up about 5. We'll see where things unfold tomorrow and the rest of the week. Enjoy the rest of your evening. Take care.